In this video, I'm going to discuss 5 important tips about candlestick analysis that every trader should know. Tip number 1. When you look at a candle or combination of candles, the first point of focus should be on the length of the shadows or wicks, whether on top of the candle or bottom of the candle. Length of the shadows are very important because they can show strength, weakness, or indecision. They also show rejection of some levels of price or entering or exiting of smart money. For example, when we have long upper shadow near a resistance level and on the other hand lower shadow and short body, this can show rejection of the higher prices and indicating a bearish strength. This formation shows that the prior trend is weakening and these high prices were rejected by market participants, and this is a bearish candle and giving the possibility that the prior trend is going to stop and a reversal of the price is probably going to happen. Or in another example, if we have long upper and long lower shadow of the same size with small body, this can show indecision and it has its own interpretation depending on where it forms. So when you're analyzing candlesticks, the first thing that you must pay attention is the length of shadows. Different length of shadows with different size of bodies create different types of candles, each with specific name and interpretation. I have complete guides to different types of candles and candlestick patterns. The link is also placed in the description of this video, and I highly recommend you to check them out later because whatever you need about candlesticks is explained there in details. Tip number 2. If there is no shadow or wick and the body is long, this shows a very strong market sentiment and the pressure and tendency of the market is in the direction of the closing price. Many of the times that we have this situation, especially after a rejection candle, it indicates that smart money is active and entered in the market. In case if we have small body, you must take a look at the volume. If there is heavy volume for the candle, it can show that smart money has entered in the market, either in the direction of the closing price or in the opposite direction, and for the confirmation of this you must wait for the next candle to see where the market is heading. For example, you can see that here somewhere in the top we got a long green candle but with no satisfactory volume, and then we got a short candle with no shadows, and if you look at the volume you can see that it's considerably higher than the previous candle, and after that you see how the price declined. Tip number 3. The context of the candles. Candlesticks should be analyzed in the context of the move. A same candle can have different meaning depending on where it forms, whether it's beginning of trends or end of trends, or they form in the middle of a trend or near a support or resistance level. For example, when this candle is formed in the bottom, it's called hammer and it's a bullish candle, but when it forms in the top, it's called hanging man and it's a bearish candle. So you should never analyze a candle or candlestick pattern in isolation, and you must look at them in the context where they form. In my guide to candlestick patterns for each candle and pattern, I completely explained where they form or how they are interpreted if formed in different contexts. So make sure you watch my candlestick guide later. Tip number 4. Volume. Price action analysis without analyzing volume doesn't mean anything. Actually, volume validates price. So when you analyze a candlestick chart and you see there is a candle or pattern telling something, it must be validated by volume. For example, here you can see that we have a long green candle with relatively low volume, so it can be considered that this is just an exhaustion move in the extent of this advancing of price, and you can see after that the trend stopped and turned to a downtrend. For this long red candle you see that we have relatively high volume, so this declining of price is validated by volume. And tip number 5. Multiple time frame analysis. When you are analyzing a candle or pattern on your chart, you must also check the lower time frame for the microstructure of the move and also higher time frame for having the bigger picture and the context that the candle is actually playing. Multiple time frame analysis is very important in trading, especially in price action analysis, and it effectively helps you find better trades and fine-tune your trade entry and exit. I'm going to make a comprehensive guide on multiple time frame analysis, and there I'll explain every detail that a trader needs to know about multiple time frame analysis, so make sure you won't miss it. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.